Hello everybody, it's Greg here from Ragosa. Welcome to the channel. Thank you for joining us, and I hope to earn your like and subscription today. I just want to make a quick video here to essentially launch something that came to mind to me this afternoon. Earlier today, this morning, because the weekly cash settled micro S&P 500 future or 500 options on the futures were not available for trading still on Interactive Brokers. And today was the release date from the CME for the single stock futures. I thought, hey, let's go take an opportunity to do some dynamic delta hedging. I haven't done dynamic delta hedging since like grad school. And you know what? I had a lot of fun. Doing it today. Just kind of a quick recap. Hit about 130 trades. And out of that 130 trades, what was it here? On the actual delta hedging aspect, I got kind of bored partway through just actually hedging the deltas and started to trend follow, and picked up about $66 in trading revenue off of that. Now that did come at a steep price from the broker at $98.50, but that's kind of more of an account issue rather than an execution issue. So that's not really what concerned me and got my gears going. What got my gears going though was I was running this morning under the framework of really wanting to zero out my deltas and close this position during the day rather than just scalping it. You know, I was keeping in mind that we were going to hold this thing right to end of day and extract all the premium that was sold on open. And because of that, I started to delta hedge using the micro E-mini futures. I was trading the micro futures, the ones that are $50 a point rather than $5 a point. And so, you know, as you scale down 1/10 the size, you know, it's 10 deltas on your option, blah blah blah. And so I was using that to really aggressively zero out deltas as or when my option went into the money. Now what that happened was, you know, bled out about $213, roughly what is that, 4.25 points, something like this, under ES size. And I was thinking, hey, you know what, I can do better than that. I can do way better than that. On the contract that was sold, the ES contract, it was a 30 delta, and managed to collect about roughly 5.5 points off of that. 5.5 points on one contract over the course of the day is pretty decent. I would call that good enough, honestly. I would call that good enough. So the real issue was just managing the gamma explosion that happened and how I was trying to mitigate that with shaving off deltas using the micro future. And I was not very successful at doing that. That was an execution failure on my part. So it got me thinking, how can I fix this? And I was like, okay, well, let's put on the thinking cap and, you know, let's kind of change things around. So what I'm gonna do for probably this week, because I can't imagine Interactive Brokers making the cash settled MES, the micro futures options available for trading, I'll just run a dynamic delta hedging, gamma scalping operation out of my paper trading account, and we'll have some fun with this, and it'll give some good kind of baseline on how this could potentially work under the single stock futures that the CME has just released. So it'll give some decent data, running on actual stock, because we can't trade the single stock futures at the moment either. So how does this look like going the actual stock? And then maybe if there's time or what have you, we can revisit the strategy and go with the single stock futures. So I'm thinking, this would be a great opportunity to basically do a little R&D playlist. This is me having a trading strategy idea, and I'm bringing you along the journey that I take to iron some things out. Now, some people like to back test immediately and figure this and that out. I do not. I like to try to sit around and ponder and think about market structure first, how we can attack this market structure, how we can kind of extract some value from it. And then I'll start to micromanage things on the back testing. I want to get some baseline, like what am I operating with? Can this strategy kind of pass mustard? And if it does that, then it's like, yeah, okay, let's look at some back testing. But for me, 9 times out of 10, I just want to know how this works under fire. And in the paper account, it's really awesome. In Interactive Brokers, everybody has access to a paper account, and it's a very good paper account. So, the fills are not always the most realistic because it is a paper account, but it's pretty close. It's close enough to at least get a feel, especially if you're using a new product like these single stock futures that will hopefully be available to trade sometime soon, or if you're trading a new strategy for yourself or working something out. So, welcome to the lab. What I'm kind of penning out right now is I'm going to go pick up tomorrow morning. I'm going to go pick up a tail hedge, and then I'm going to pick up a hedge for a little bit more gamma, in case I need to roll out the position. So I'm going to manage my gamma by rolling up and out. The roll mechanic is going to be my first line of defense on gamma management. And then at some point, if that's starting to fail, then I'll start thinking about adding in some of the underlying future to zero things out. But let's try to see how things work with just running the roll mechanic first. So we're going to do that on the main meat of the strategy, which is the 0 day to expiry S&P 500 micro contract. That's ES. So we're going to run with that. And we're looking to sell the contracts that are maybe 25 to 35 delta. We're looking for at least 10 points of premium in the contract, enough juice to make it worth the squeeze, so to speak. And we'll see if that's a good place to start, because you got to pick some place to start, and that seems about as good a place as any. It's kind of within the expected move. It's like right on the edge of it, roughly speaking. So we'll see how it goes. And then what I'm going to do is I'm going to pick up some Vega and Gamma hedging for the underlies that we are dynamically delta hedging based off of their beta weights. And we'll see. So that'll give some hard cap in case the market runs in one way or the other direction, while we have what is supposed to be some of our excess alpha generators, or what we're kind of shaving delta off for our main meat in the strategy. So we'll see how that goes. Most likely, this strategy is going to be very overhedged, and we're going to see how that plays out. I know that I'm coming in overhedged here by essentially doing a asymmetric strangle. That's an asymmetric strangle, but it's going to be in different expiries as well too. So I want to hedge downside Vega, and I want to hedge upside Gamma. I'm more concerned about the upside Gamma than I am the volatility that expresses itself in the upside. Not that it's Vega operates in both directions. It's direction independent. So let's not jump into that. But this is why I'm looking. I'm gonna shift where I'm going, and I'm not looking to go a 30 DTE 10 delta long strangle. I'm not just throwing that on there for my hedging purposes, because I don't think that's going to effectively hedge out the Greeks that I need to have hedged out. It might. I mean, I'm not saying I know what's going to happen right out of the gate. I'm just saying I'm going to take some experience, some background knowledge, and try to find something that is close enough at first so that I can narrow in the strategy. And it's going to take, it's going to take some time to figure things out. And I hope you enjoy the process. You can see how I think, how I attack this stuff, and maybe it'll help you with your trades. Maybe it won't. Maybe it'll help you develop trading strategies. Who knows? Maybe you'll just find this pure entertainment. That's cool too. I mean, a lot of this is just gonna be like kind of watching a dude play a video game. We're dealing with paper money, so it takes that kind of psychological risk out, or it's that psychological pressure, and we can just focus on pure execution. For any of you new bros out here, trying to dynamically delta hedge is a great way to get a feel for how Greeks work in your options here. There's a lot of different ways that you can look at this dynamic hedging, and we're going to look at it in the most aggressive and violent way possible in the 0-day contracts. If you're going to delta hedge, dynamically delta hedge, say a monthly contract, a 30 DTE, 45 DTE, something like that, something where you are selling or you're focusing on selling Vega, that's going to look a lot different. That market is going to move a lot slower. We're not looking at 5 minute. Well, 5 minutes. I don't know if it's 5 minutes or not. But I'm saying 5 minutes because my charts are all 5-minute charts. But we're not looking at momentum flows. We're not looking at order flows. We're not looking at price velocity. We're not looking at, is this thing starting to taper out right now? Do we need to cut our hedge? Because we're going to have so much premium if you're in that 45 DTE cycle that there's a lot of wiggle room. You do not have that kind of wiggle room in the 0 DTE. So, it's a good sandbox to just sharpen those knives and hone those skills on gamma scalping, which is going to help me because that is what I prefer to do in the MES options space, the E micro S&P 500 space, and hopefully Interactive Brokers will launch those contracts to be available to trade soon, and then you can watch me trade that thing live with with actual capital at stake. Although when that happens, full disclaimer, I am not showing you guys what contracts I'm trading, and I'm not showing you the option chain. That is for me. And if you want to get into this kind of trading, that's something you're gonna have to figure out on your own. And hopefully this series is going to give you a little bit of insight on how you might go about developing a trading strategy on your own, rather than just listening to some influencer on YouTube, myself included. Not that I'm an influencer, I'm just a dude that's slinging some contracts, and apparently some of you guys like to watch me. So thank you very much. Thank you for the support. I really appreciate it. I'm watching the view count on these videos tick up. I'm watching the watch hours accumulate, and it's really showing me that some of you guys really want to watch this stuff. So I'm just gonna keep on doing it because I'm having fun doing it, and I hope it's gonna help someone out. If it helps you out, if you feel inclined to throw a comment and say, hey, thanks, I learned something, you know what, that would make my day. If you're shy, don't worry about it. Just the fact that you viewed and you had some watch time on it, that's good enough for me. I have very low expectations. I don't know. I'm easily impressed. I don't know. I'm just having fun with this. Just having fun. So anyhow, I'm starting to ramble, but there she goes. I'm going to create this playlist here for you. This video is going to be pinned at the top. Today's video from the morning is going to be video number 2 underneath this introductory video. And then tomorrow's video, where we're really kind of honing in this strategy, is going to be video number 3 on the playlist. So, keep an eye out for that. And have yourselves a wonderful evening, and we'll see you for market open. All right. As always, happy trading.